Week there's an OPEC Plus meeting, a meeting which would, under normal circumstances, mean that Russia would turn up to discuss oil output as one of the biggest OPEC Plus partners. The Russian invasion of Ukraine, does that change anything? Let's take a look now in some more detail about where we go with this, and also ask the question about $100 plus a barrel for a barrel of Brent. Is OPEC happy with that sort of level? Can it do more? If indeed it wants to do more to bring the price down. Let's discuss the OPEC Plus relationship and the price of oil now with Nitesh Shah from WisdomTree. Nitesh, good day to you. It's a pleasure to have you on board just a couple of days before this OPEC Plus meeting. Let me just ask you first of all about this OPEC Plus relationship and the recent developments and Putin's war. I call it Putin's war, Russia's war with Ukraine. Does it change anything in terms of the relationship? Will we see Russia turn up with its normal delegation to this OPEC Plus meeting come Wednesday?
Yeah, so Russia has been a partner with OPEC since 2016. And, it's had its ups and downs. If you go back to 2020, there was the big dispute between Saudi Arabia and Russia, which led to flooding of the market with oil at a time when demand was collapsing. So OPEC players and the non-OPEC partners haven't always seen eye to eye, but I think what we have been seeing more recently is a strengthening of that partnership between the key OPEC countries like Saudi Arabia and Russia. They have become much more politically aligned in recent times, and the absence of countries like Saudi Arabia and the UAE in speaking up against some of the actions of Russia in Ukraine in recent days, so almost indicates that they're not likely to really depart that strongly away from what Russia wants out of this meeting. And my guess is that Russia will seek to keep oil markets quite tight as that inflicts maximum pain on players that disagree with its military action.
So you think that there will be the normal meeting at OPEC Plus? There's going to be no sort of upset to that sort of relationship, because obviously when looking at OPEC, we have, and of course non-OPEC nations as well. There are some countries in the West, Mexico and so forth, that might object to having Russia around the table. Do you think there's any political issues about this meeting this week, and will it potentially end in any acrimony, or do you think politics will stay at the door?
I mean, if you look at OPEC, you could look at the players even in core OPEC, not just OPEC Plus. Outside of the meeting room, and it'll be a virtual meeting room this time. It's done by teleconference. There have been people who are, there have been countries who are at war on the battlefield, but in the room in Vienna, or the virtual room in Vienna, they're there to negotiate oil markets. And OPEC's stated, raison d'etre is to keep oil markets in balance. And that's what they rely on. They take the data and they use their technical committee to process the data, say how far away from balance are they, and act upon that. But there is a subtext, right? There is an element of political alignments that countries create, and the strongest two players in that whole OPEC Plus group are Saudi Arabia and Russia. And I think regardless of what some of the smaller oil producers within the OPEC group will want, it's really what these two big players decide on that will dictate the outcomes of the meeting.
Let me just ask you about the sanctions that have been placed on Russia over the last 24, 48 hours or so. And we're hearing anecdotal evidence that it is going to hit Russia very hard. Does it affect the price of oil at all? Is there any effect in what we're seeing today at the moment, Brent trading just below the $100 barrel level? Is any sanction priced into these sort of levels, do you think?
Yeah, I think, if you look at what's happened over the past week or so, you've seen a very strong rally in oil prices, and that is on the back of the actions and potential further actions that can be taken on Russia. So that there is that tightening priced in. Now, if you think about what the sanctions are doing, they're not really affecting in a direct way oil or natural gas exports. So they're not under sanctions, not on embargo, not in the same way, like we see with embargoes on Iranian oil exports. But what we will find is sanctions and other activities to curtail financing activity, curtail exports of other goods and services from Russia will have an indirect impact on oil. Financing is a key aspect. If the oil infrastructure in Russia cannot be sufficiently financed, that causes a problem. And we're always citing anecdotal examples of this, right? So, for example, BP owns 20% of Rosneft, a Russian oil company, and they've announced that they'll be disposing of those assets. Done in a distress situation, that causes disruption. That's likely to disrupt oil coming out of Russia.
Let's now move on to what the likely outcome of this meeting is this week now in terms of what the OPEC plus nations will decide. I think I'm right in saying, aren't I, that we've got an extra supply in the market already at 400,000 barrels a day. I believe that's the case, that OPEC is supplying. Is that going to change, do you think? As I said, going back, let's bring up the price of oil and to show exactly what's been happening, because we've seen a really big move away. This chart I've got up here, in fact, goes back to the COVID lows back in April 2020, where we saw spot Brent at 18.99. Now, I know at that point, some of the forward contracts there, some of the contracts were trading below zero. So it was actually costing more to find ways of trying to store the oil. But things have repaired a lot. What's the market like at the moment? What will we see OPEC Plus do in terms of their decision on how they're supplying the market?
Yeah, so thanks for putting in the context there. In 2020, we had demand destruction and massive oversupply, and OPEC and its partners through working very diligently with its quota since the middle of 2020 has been able to absorb a lot of the excess supply, and the excess inventory has been coming down rapidly in this period. Now, that's the point at which OPEC has decided to start expanding its supply, unwinding the supply constraint. And if it maintains that pace of 400,000 barrels per day each month of increase, it should unwind all the production restraint by the middle of summer. Now, OPEC isn't delivering fully on that. That's the problem. Saudi Arabia and UAE are likely the countries that have the most spare capacity at this point in time. They're producing right up to their quota, but a large number of other countries, including Nigeria and Iraq, they're struggling to actually meet their current quota. So unless the quota is being redistributed amongst the countries, I think OPEC's going to really struggle to actually meet that production increase, and therefore markets will be very tight. Now, as an indication of how tight the markets are, if you look at the futures curve for oil, back in 2020, it was an upward sloping curve and very aggressively upward sloping, meaning the price for oil delivery immediately was a lot lower than delivery in a couple of months' time. That's showing price weakness. Now we are in a situation, what was called backwardation. We've got downward sloping futures curve where the price for delivery immediately is significantly higher than price for delivery in a couple of months' time. Now, the only logical reason for prices being more expensive for immediate delivery than in a couple of months' time is people are desperate to get hold of that oil. The state of backwardation is very important for oil investors because it actually enhances their investment when investing in futures-based products.
Does that backwardation imply that Brent at current levels is due in a couple of months to drop, on the spot price, or does that not have a relationship?
Yeah, so the current shape of a curve is reflecting today's reality. It's not necessarily a predictor of prices of next month or the month after, but what it does indicate is that the markets um, don't have enough supply today. That's why the price is very strong at the very front end of the curve. The markets today are expecting easing of supply going forward, and therefore prices further out in the curve are lower. But it's not necessarily an accurate predictor of future prices, if that makes sense.
Absolutely, it does. I just want to follow up with one final question, if I can, and that is talk about one of the other contributors to global oil markets, a non-OPEC member, which is the US. Now, we follow on a weekly basis the Baker Hughes rig count, and it's incredible actually how many more rigs have come on recently. I think last week was the 4th week in a row we've seen rigs added. We've got around about 200, I think it's about 600 rigs in total, 650 rigs, 200, 300 more than we had this time last year. So clearly there's a lot more oil coming onto the market. How is the US doing in terms of its production? And do you think that there's a capacity there to see a continuation of a ramp up from the US?
Yeah, so you're right. US oil production has rebounded very strongly since the worst of the COVID crisis, and rigs are coming online at a very strong rate. Production levels have risen to over 12 million barrels per day, which is very, very strong. But part of this is on almost borrowed time in some ways, and let me explain that. Prior to the COVID crisis, lots of wells in the US were so-called drilled but uncompleted. There was plenty of financing to go around, but not necessarily the demand for that oil. So a lot of these oil companies just simply drilled the wells, but never finished them off and pumped the oil out of them. Now, today, where a lot of the US oil companies are utilizing those drilled but uncompleted wells, but they have a finite life. And US shale production generally has very short cycles. And so, it's not like the oil wells you see in Saudi Arabia or in the Brent region, which are typical vertical wells, which may have, 10 years of capex to actually, build them out and 40 years of production thereafterwards. We're talking about cycles of 1 year capex and maybe 3 to 5 years of production. So there's aggressive rates of depletion in the US. So without new financing entering the market, it's going to be very difficult. I think a lot of the US players have actually sort of given up in terms of expanding production in an aggressive way. There are all the environmental concerns around oil production, which makes it harder to attract investors from either banks or even through capital markets. But secondly, we've known that in previous oil cycles, those who invested in these companies were quite disappointed with their returns, and therefore, even putting environmental things aside, they're quite reluctant to offer that much more sort of capital market assistance.
Interesting. Look, Nitesh, we'll have to leave it there, but thanks indeed for joining us. Let's look ahead to that OPEC Plus meeting midweek. That's Nitesh Shah joining us there from WisdomTree. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.